Hello everyone, it's Khaled. Welcome to today's daily pitch, 4th of Feb 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Well, we will start with our economic calendar and see what do we have as pre-planned economic events. Also, we will cover what took place as well last week. We have seen high volume and volatility, specifically talking about metals, Dxy, and the US equities, and then just what are the expectations for the next couple of days as well regarding the economic data. So for today, February 4th, we have some economic data for the Eurozone and for UK and for the US, mainly related to the PMIs. We saw that we had the PMI services PMI for France better than expected, but still lower than the forecast and lower than previous, which is at the 50 grade point. Germany as well, the numbers came in lower than expected, but as the most important that it's above the 50 grade point. For PMIs, we have the 50 level. Anything above the 50 is considered an expansion for the economy. Anything under the 50 is considered a contraction for the economy. A couple of minutes ago, we had the PMI for the UK, the services and composite PMI. Well, the numbers are still better than expected. Moving on during the day, we have the CPI for the Eurozone. The Eurozone is expected, the CPI is expected the year over year to drop from 1.9 to 1.7%, and the core CPI excluding food and energy is expected to stay stable at 2.3%, knowing that the ECB target and even the Fed's target is at 2%. Moving on during the day, we have the ADP non-farm employment change. I'm not sure about this number if it will be released because due to the partial government shutdown, as we read that the non-farm payroll and unemployment rate that we had scheduled for Friday is being postponed. So I'm not sure regarding this number. Jolts opening as well. We have as well the services PMI for the US, the S&P at 52.2, the expectations above the 50 grade point. And we have the ISM non-manufacturing PMI also above the 50 grade point. So that's it in general regarding the economic data. What was more important than the economic data, which we talked a little bit previously about, is the movement we saw on gold, on DXY, and on the US equities. Let's have a look here. Well, starting with DXY, or let's look at it in the bigger chart. Starting with DXY, we can see that DXY was trending really bearish. This bearish movement is mainly related to the market expectations of rate cuts. In addition to that, we had one comment from the US president stating that he doesn't mind the current dollar levels. In other words, he doesn't mind a weaker dollar. Why? Because a weaker dollar will give an advantage for the US with related to exports, and it will make the cost of debt cheaper on the US. But whenever we reach this level, last week we heard in news, it was the nomination of Kevin Warsh to take over the Fed chair after Jerome Powell. Why we had this strong market impact and dollar bull? Kevin Warsh is known to be more hawkish than Kevin Hassett. He wants to focus on fighting inflation. So that's why we saw the markets pricing in that the interest rates will be higher for longer, since that's his goal. And in addition to that, he doesn't support the quantitative easing. To explain a little bit, go a little bit more details. The Fed has two roles or two tools in order to fight inflation. Number one, they could increase the interest rates. So in this case, interest rates are higher, cost of borrowing is higher, less financial activity, so they will fight inflation, or they can make quantitative easing or quantitative tightening. What is quantitative easing? Whenever the Fed wants to stimulate the economy, they make quantitative easing like printing money, pumping money into the markets, buying bonds from big institutions and giving money. So this is known as the quantitative easing. And Kevin Warsh is known to be against the quantitative easing. In other words, he will not be giving or pumping money to the markets anymore. This is another reason why we saw that markets are currently moving up, specifically talking about the DXY. What about gold? What was the reaction? Of course, we all heard about it. Gold had a huge profit-taking move after it reached the 5,600. Several reasons. The nomination of Kevin Warsh was one of the triggers. As we said, we saw some dollar bullish momentum. Gold dropped down. In addition to that, with regards to the huge amount of speculation taking place on the dollar, a lot of investors just started to panic sell. Another news related to this strong movement down is related to the margins. A lot of currency exchanges in Japan, in Chicago, and others started to ask for higher margins in order to trade gold. That's why a lot of investors started liquidating their position, and then we saw this huge drop down on gold. The question is now, what is gold? What will it do next? In general, fundamentally speaking, all the fundamentals that supported the gold bullish movement are still available. That's why we saw that whenever price reached the 4,400 approximately, investors just took advantage of these lower prices, and currently we are trading above the 5,000 key level. As for the US equities, specifically talking about Nasdaq, let's have a look here with the 1 hour. Yes, we can start looking on Thursday. Nasdaq saw this sharp move down because Microsoft announced its earnings. They are better than expected, but it was not as optimistic as the markets wanted. That's why Microsoft shares dropped by around 10-11%. Nasdaq was affected. We saw this huge drop. And one another thing here, this drop on Nasdaq is another factor that led to the gold movement down. Why? Simply because a lot of investors will be holding a position here, and whenever we started to see a drop, the investors want to liquidate their position, so they use the money that they have here on gold, they sell their gold in order to cover these sell positions. So simply a lot of factors at the same time that took place that led to gold drop, and of course to silver a huge drop as well. Now let's talk technically speaking and look at the charts. Looking at the dollar index, we can see after this bounce here, the dollar index is currently finding a resistance that was unable to break at the 97.5. We can see 2 times we visited this area and then we moved lower. So for the dollar index, in case we broke lower, retested this level, and most importantly, in case we are able to break below the 97 key level, I believe we could be just doing something like this. My next area I will be looking at is the 96 flat. This is the first scenario I see on the dollar index. Let's put it like this. This one will be not a major but a minor one. Okay, another scenario, what if the dollar bulls are continuing? What if we have a better than expected economic data supporting that the Feds will keep interest rates higher for longer? In this case, we could be breaking higher, specifically breaking above the 97.6, retesting, and my next area I will be looking at is these candles consolidation here at the 98 to 98.2. I will be looking at this level. Okay, I will be looking at these levels. So these are in general the 2 scenarios, at least during this week and next week. Of course, if we have any new reactive headline or anything that we are not expecting, this could support this dollar movement up or down. But in generally speaking, fundamentally, I will be looking at these 2 areas. Let's move on to gold and see what is going on. What are the expected scenarios we could see on gold? Well, on gold, I had several areas of interest I was marking. I wanted, but it didn't happen, to see another retest of the 4,000. It would have been a beautiful retest and rejection. Currently looking at the price action, I will be monitoring the following. This area here, I will be monitoring this area. I will be looking at this candle wick close. Let's move into the 30-minute time frame. And I will be looking at something like this. The scenarios I will be looking on for gold are the following. As we said, fundamentally speaking, gold is bullish, but of course, technically speaking, we could have any kind of correction, pullback, and then continuation move. The first scenario I would like to see on gold, and this is the most favorable scenario for me, in case we have an intraday candle, let's zoom in a little bit. In case we have an intraday candle, a 30-minute candle, closing bearish below this, the next one making an upper wick and starting to flip bearish, I would like to see a retest of the 4,900. You can see at the 4,900, we broke higher. Several times we retested this level, but candles were failing to break lower. They were either weak bearish candles or weak bullish candles, or just bearish candles with a lower wick and then closing higher. So reaching this level, I would like to see the following: candles failing to break lower, consolidating, or making like any technical formation indicating reversal, maybe a head and shoulders or double bottom, or any technical formation, inverse head and shoulders, and we could see something like this. Let's put this in red. Okay, this is the more favorable scenario for me, is to see candles retesting the 4,900, and this is scenario number one. Scenario number two, what if we broke higher? While breaking and closing above the 5,100, we need an intraday candle closing, the next candle retesting. I believe we could retest these candle highs at the 5,220. In case we have the bullish momentum to close here, maintain above this level, and then start to flip bullish once again, I believe we could be retesting again the 5,200 key level. For me, this zone is a no trade zone. I wouldn't trade in this choppy area. It is between the 5,050 to 5,100. Due to the volume and volatility we are seeing on gold, of course, your stop loss and take profit will be adjusted, and in parallel, your lot size will be adjusted. Like we mentioned it in our last analysis, that your stop loss could be 100, 200, or 300 pips, but at the same time, your take profit will be at 400 and 500 pips. Right now, the volume is still available. It's not as aggressive as we saw here, but keep this in mind, that to adjust your stop loss and take profit and your lot size. So guys, we're going to keep it simple. I just wanted to give some explanation fundamentally what's going on, technically which areas of interest I'm focusing on gold. And that's it for our episode for today. Hopefully you enjoyed it, and we will see you soon. Thank you so much for joining.